Welcome traders, freetradingvideos.com. This is Breakout Trader. I'm going to take you through ISSU tonight. I received a question on my previous video. A little bit confused about ISSU. What is it a measurement of? ISSU is the ratio between advances to decliners on the New York Stock Exchange. We use this as a market internal to gauge the strength or weakness of the broad market. Okay, now I follow this more so on a 5-minute chart than anything else. On the ISSUs, there's two parameters that I focus on, that I look at. First one is ISU at 0.5. 0.5 or lower, I cannot go long the market. I can only go short the market. This is saying that there's very, very few stocks trading to the upside. There's very few advances, which means there's very few stocks that are trading above the close of yesterday on the New York Stock Exchange. And we have a greater ratio of stocks declining on the market. The next or second parameter is 1.5. Above 1.5, this is my bullish parameter. I can only go long the market. I cannot go short the market. I have greater probability of follow through to the upside than what I do taking a position short. This means we have a greater number of stocks advancing on the New York Stock Exchange than what there is declining. This is a pretty typical day. Now we're back on the 9th of October because anytime up until then, ISUs are being all over the place. As I showed in the previous video, we're at 19.2. That was basically, from my records, history making. I'm not too sure we'll ever see that one again. We may in the next few days as this market plays around. With a VIX at near 70 again, days like today, 700 points in the Dow, we're going to experience. So here we are. This is very typical when the futures are up in the morning, market gaps up. For the futures to be up, you're going to have a lot of stocks gapping up on the market. As all the issues or all the stocks open on the market, okay, we will force immediately lower. This is very typical. We can see this 1.5 area here. We break below, this used as a resistance, and then down we go. For the remainder of the day, that 0.5 area down the bottom here is also used as a resistance. This 0.5 area is where sell programs can be generated and push the market further down. If we can break above it like we did here, and we get follow through here on there, that'll be a buy program hitting the market. 1.5 is a very, very common area of resistance. It also can be used as a support area, such as this example. Back here on the 30th of September, we see we opened at 9, so obviously the futures were up that morning. As all the stocks open on the New York Stock Exchange, it balances out. You can see we come right down at 1.5 right here, and then we bounce. You can see the time there, 9:55. That is generally when the trend is set for the morning session of the market. Right down at 1.5, and boom, straight back up. And we can see that we move up with quite a rapid increase in advances on the market. That right there is a buy program hitting the market, forcing the ISSUs up. So very simplistic to try and keep this simple at this point. But below 0.5 is bearish, above 1.5 is bullish. If we're in that median range, we can generally not have that greater range on the Dow and S&P and NASDAQ. They're going to be basically a fairly average day. Remember, we're not in an average market right now, so an average day right now is 200-300 points on the Dow. In what would we call it, a normal, consistent market, we might expect a 50-point rally on the Dow, where usually 120 or 150 points on the Dow is a big day. Thanks for attending freetradingvideos.com. I hope I cleared the question up. If not, please make comments right here on the videos. Until next time, this is Breakout. Breakout out.